All right, let's really dig into this. In the dynamic, often turbulent world of digital assets, identifying projects with genuine, sustainable potential and a clear strategic roadmap can feel like sifting through a lot of noise, right?
Definitely. It's hard to cut through the hype sometimes.
But every so often, a project emerges that uh, really demands a closer look because of its, let's say, meticulously designed approach. Today, we're taking a deep dive into AIFEX and its native token, AFX.
Sounds good.
Our mission today isn't just to skim the surface. We're going to try and uncover the intricate underlying mechanisms and the strategic vision that, according to our sources, could significantly propel AFX forward.
Yeah, moving beyond just the surface claims.
Exactly. This isn't about chasing fleeting trends or, unverified hype. It's about dissecting a system that appears to be carefully engineered for long-term value. Think of it less like just another cryptocurrency and maybe more like a finely tuned financial engine, built with considerable foresight. As we navigate through our sources, you'll see exactly how the specific gears in this machine are designed to turn and why that matters.
And what's truly compelling here, I think, is how the sources we've analyzed approach AI. Why these particular mechanisms are strategically crucial for its potential growth. It's presented, interestingly, from the perspective of a seasoned DeFi strategist,
Okay.
offering a very clear step-by-step breakdown of not just the inherent strengths, but also the distinct differences that aim to set this project apart from, well, the vast majority of others out there. We're looking at a blueprint seemingly designed for resilience and growth.
Okay, so let's kick things off with maybe a foundational concept. It's something frequently discussed in crypto, but often implemented with, let's say, varying degrees of success.
Sure.
The token burn mechanism.
Ah, yes, the burn. Always a popular topic.
And in AIFEX's context, the sources suggest this is where the strategic design really begins to differentiate itself.
Oh, so?
Well, the AIFEX ecosystem generates revenue from a diverse set of modules. Specifically, we're talking about AI DeFi.
Right, AI and decentralized finance, yield farming optimization, things like that.
Exactly. Then there's AI MEV, focusing on AI-powered maximal extractable value strategies.
Yeah,
Basically, intelligently ordering transactions to capture profit.
which can be quite complex, but potentially very lucrative.
And also AI CEX, which integrates AI into centralized exchange operations for, enhanced trading.
So multiple revenue streams, all AI-driven.
Correct. And the crucial insight here is that a significant portion of the revenue generated from these sophisticated modules isn't just sitting in a treasury somewhere.
Okay.
Instead, it's actively used to buy back AFX tokens directly from the open market.
Ah, the buyback part.
And then, once acquired, these tokens are burned, permanently removed from circulation.
Okay, so that creates a powerful direct link, doesn't it, between the platform's actual usage and the token's scarcity.
Exactly.
To connect this to the broader economic picture, the more the AIFEX platform is actively used, the more its AI modules generate profit, the more revenue becomes available.
That makes sense.
Which then directly fuels this buyback and burn process. It systematically, continuously reduces the total supply of AFX.
Right.
Now, for you, the listener, the astute investor, this raises a pretty fundamental question. What typically happens when the supply of an asset actively shrinks while demand either stays constant or, ideally, grows?
Yeah, basic economics points towards price pressure upwards.
It's a classic, time-tested principle designed to exert significant upward pressure on price. Now, many projects try a burn mechanism, but they often struggle to sustain it, maybe due to inconsistent revenue.
Sure, it happens.
AIFEX, according to our sources, aims to address this head-on by explicitly tying the burn to its diversified, actively generated AI profits. This gives it a potentially more robust and sustainable foundation for long-term scarcity.
That proactive reduction of supply is certainly one powerful lever, but like you said, it's only one side of the equation.
Sure.
What about ensuring consistent intrinsic demand for the token? AIFEX, the sources reveal, has a particularly unique answer to this with its 70% revenue reinvestment model.
70%, that's quite high.
It is. This isn't just about reducing existing supply. It's about actively creating demand. Unlike many projects that might retain a large chunk of their earnings for, say, operational costs, or maybe distributed as dividends.
Right, standard practices.
AIFEX has a built-in automated mechanism that channels a remarkable 70% of its generated revenue back into the system, specifically to buy AFX tokens.
Wow, And this isn't discretionary.
No, it's designed as a continuous algorithmic process,
Yeah.
not a one-off event.
Okay, so this continuous reinvestment creates what our sources aptly describe as natural buying pressure within the ecosystem.
Natural buying pressure. I like that phrase.
Dish. It's an automatic, consistent force that helps to buoy the AFX price by constantly re-injecting capital into the demand side. From a strategic viewpoint, this aggressive reinvestment policy is quite telling, isn't it?
How so?
Well, some might argue that retaining more capital allows for more flexibility in other areas, maybe development or marketing.
Sure, that's a valid point.
But dedicating such a high percentage directly back to the token signals a profound commitment to long-term token value and, frankly, a belief in the self-reinforcing nature of their economic model.
It's like they're doubling down on their own success feeding the token.
Exactly. It effectively transforms the platform's success directly into token demand, creating a self-sustaining feedback loop. That genuinely differentiates AIFEX from many projects that rely more on, external factors or just sporadic interest to drive buying. It reflects a long-term vision.
That's a fascinating closed loop. But, okay, to sustain both the burn and this huge reinvestment, the project needs robust and consistent revenue generation, right?
Absolutely critical. That's the fuel for the engine.
And it's not just about traditional, often passive income streams like staking. This is where AIFEX leverages cutting-edge technology with its AI-generated new revenue streams, specifically through advanced AI trading, arbitrage, and those MEV bots we mentioned.
Right, the active generation side.
These aren't just buzzwords. These are advanced, continuously operating AI-powered strategies. When we talk about AI trading, we mean algorithms designed to analyze market data, execute trades with high precision, high speed.
Trying to catch those market movements.
Arbitrage refers to exploiting those tiny transient price differences for the same asset across different exchanges to secure, ideally, low-risk profits.
Classic arb plays, but supercharged with AI.
And as we touched on, MEV bots, these sophisticated programs designed to strategically order transactions on a blockchain to extract maximal extractable value. Complex stuff, but often lucrative.
Definitely.
The crucial distinction here, though, is that these are actively generating new incremental profits on a daily basis. They're not just relying on static capital or user fees.
And what's particularly insightful from the sources is how these actively generated dynamic profits are then strategically channeled back into the buyback and reinvestment mechanisms.
Completing that loop we talked about.
Exactly. This continuous infusion of fresh capital directly reinforces the demand and, by extension, potentially the price floor for AFX. Now, it's vital to acknowledge, of course, that AI trading and MEV operations in volatile markets, they come with inherent risks.
Sure, potential losses, algorithms not working as expected, security issues.
Precisely. Algorithmic failures, security vulnerabilities. However, the sources do emphasize AIFEX's approach to risk management. They detail how diversification across these multiple AI strategies, coupled with robust algorithmic controls and continuous monitoring, is designed to mitigate these risks and aim for a more consistent stream of profitability.
So managing the downside, too.
Right. It's not just about chasing high returns. It seems to be about building a resilient, innovative economic engine that can adapt to market conditions and continuously inject fresh capital. It demonstrates a truly proactive approach to value creation.
Okay, makes sense. But, any project, no matter how technologically advanced, needs a vibrant, engaged community to truly thrive and achieve widespread adoption.
Oh, absolutely. Community is key in crypto.
AIFEX seems to understand this intimately, and the sources detail how it has allocated specific resources to foster ecosystem and community incentives.
How are they structuring that?
Well, first, 10% of the total token supply is thoughtfully reserved for ecosystem incentives. These are designed for strategic initiatives like airdrops, various reward programs, promotional campaigns, that sort of thing.
Okay, so bringing new people in, encouraging usage.
Exactly. The overarching goal is clear. Attract more users to the platform, encourage them to actively use AIFEX's various modules, stake their AFX tokens, and generally foster long-term holding.
Right, so that directly expands the user base and utility, which should naturally increase demand for the token itself.
And then there's more.
Oh.
An additional 15% is specifically set aside for community incentives.
Okay, 15%. What's the focus there?
This pool is geared towards rewarding existing loyal users and early investors.
Rewarding the early believers and current holders.
Think of it as a powerful magnet that not only attracts new participants, but also solidifies the commitment of the current community.
That makes sense. So when new users see the benefits, maybe hear about rewards, and want to participate.
They need to acquire AFX, right?
Right. Which, again, directly drives consistent buying pressure. It's like a dual-pronged approach to organic growth and sustained demand.
The sources really emphasize that these incentives aren't just like random giveaways.
No.
They're framed as carefully structured programs designed to cultivate a desire for people to hold AFX for the long term, fostering a loyal, actively growing, and self-reinforcing user base rather than just transient interest.
Building a sticky ecosystem, essentially. Not just attracting eyeballs, but keeping them engaged.
Exactly. Okay, finally, let's talk about a critical, maybe often overlooked aspect of building confidence and long-term viability in the crypto space: stability and investor assurance.
Hugely important, especially in volatile markets. Liquidity is paramount.
AIFEX addresses this with a significant liquidity reserve in place, dedicating a remarkable 70% of its tokens for this very purpose.
Wow, 70% just for liquidity. That's substantial, far higher than many projects allocate.
It is. And this isn't just a static figure on a balance sheet. This substantial reserve is framed as a proactive measure designed to ensure ample market liquidity and overall system stability.
So facilitating smoother trading, reducing slippage.
Right. It's about maintaining a healthy, robust trading environment, which is paramount for any digital asset aiming for broad adoption and sustained value.
This really raises an important question for any strategist, doesn't it? What message does such a dedicated, exceptionally large liquidity reserve send to both, say, new retail investors and seasoned institutional players?
Yeah. What does it signal?
Well, it unequivocally signals that the project is serious. It suggests it's incredibly well managed, or at least aims to be, and deeply committed to long-term sustainability. It helps combat the perception of being just another fleeting speculative venture, a fly-by-night operation.
Builds trust, essentially.
Yeah, actually. In a market often plagued by volatility and uncertainty, this level of commitment to liquidity acts as a powerful deterrent against sudden, destabilizing price swings and helps facilitate smoother trading for everyone. The sources highlight that this builds immense confidence, and that confidence itself, in a very real sense, can create a kind of premium on the AFX price over time.
Interesting. Confidence is a value driver.
It's a vital cornerstone for building a truly trusted, resilient, and powerful ecosystem. That 70% figure really suggests a strong strategic focus on stability right from day one.
So, let's try and pull this all together. What does this mean for you, our listener, who might be assessing the long-term potential of various digital assets?
Yeah, bring it all home.
We've delved into 6 powerful, seemingly intricately interconnected strategic reasons for AFX's potential, as highlighted by our sources. The aggressive, revenue-fueled burn mechanism,
Reducing supply.
the continuous 70% revenue reinvestment,
Sustaining automated demand.
the dynamic AI-driven profit generation,
Fueling the whole system.
the robust ecosystem and community incentives,
Growing the user base and rewarding loyalty.
and finally, that rock-solid 70% liquidity reserve.
Providing stability and confidence. Phew, that's quite a list.
It is.
If we connect this to the broader picture of crypto economics, AIFEX appears to present a comprehensive, strategically engineered approach to value creation and sustainability.
Engineered's a good word for it.
It really is. It's a system designed to continuously reduce token supply while simultaneously creating multiple, automatic, and diversified streams of demand. This isn't just about chasing short-term speculative gains. It reflects, or seems to reflect, a deep, long-term vision and foresight that aims to position AFX uniquely.
Right.
Now, obviously, no project is entirely without risk. We should always stress that. But the differentiation here truly seems to lie in this integrated, active, and community-centric economic model. It proactively tries to address many of the common challenges and pitfalls seen across the digital asset landscape.
Like projects running out of steam or demand drying up.
Exactly. The entire structure looks designed to weather market shifts better and build intrinsic value over time.
And the sources specifically highlight that this integrated strategy sets the stage for potential significant price increases, particularly in the medium to long term, especially when major catalysts might hit the market. Like, they mentioned an upcoming CEX listing in Hong Kong.
Ah, okay. A major exchange listing is often a big catalyst.
That's potentially when all these carefully designed supply and demand mechanisms could truly converge for a powerful, demonstrable surge. It would certainly put the strategic architecture to a real-world test.
A major test, indeed.
So what we've explored today is really a deep dive into the strategic mind, if you will, behind AIFEX. unveiling a project with what appears to be a meticulously planned architecture for growth, stability, and community engagement.
Yeah, it's a compelling case study, at least on paper, in how one might try to build intrinsic sustainable value in the digital asset space through smart integrated design.
Definitely food for thought.
Absolutely.
Yeah.
Consider the profound implications, just as a thought exercise, of a project that fundamentally re-engineers its tokenomics to consistently reduce its own supply while simultaneously generating multiple automatic streams of demand.
Hmm.
How might such a comprehensive, strategically robust model challenge and maybe reshape our understanding of sustainable value creation in the broader cryptocurrency landscape?
Good question.
It pushes us, I think, to look beyond mere speculation sometimes and truly appreciate the elegance and foresight that can go into a well-designed, resilient economic model.
Well said. Thank you for joining us on this deep dive into AIFEX and the strategic potential of AFX. We sincerely hope this has given you, our listener, a clearer, perhaps more powerful understanding of its vision and capabilities seen through the eyes of a strategist.
Hope it was insightful.
Keep digging, keep learning, and we'll catch you on the next deep dive.